What's up, guys? Welcome back to Crypto Weekly Review, home of the Wolf Pack. I gotta tell you, I gotta warn you, this is not going to be one of my Moon Boy streams. We got some bad PCE data. It came back hotter than expected, and the markets are absolutely panicking, and they have dumped the S&P 500 below the bear abla. Man, 2023 seems like it's going to be another wild ride. This is the Wolf Pack right here, bro. We're having fun hanging on to these garbage markets. So I'm not ready to call this the biggest bull trap of all time, but we did break the bear abla, okay? This is the bear market trend line. Everybody got super excited when we pumped out of it. Now, typically what happens is we will come back and retest it. A retest and a bounce and taking out the high, and it's bull market time, baby, okay? And that's what Bitcoin did. Remember, Bitcoin dropped down, confirmed its bear abla, right? Its bear market trend line. Look at that. Confirmed this nasty trend line right here and popped up and set a new high. That is exactly what you want to see. Now, look, we are actually above the 21 exponential moving average. If we bounce off of this thing, if we bounce up and take out 25K, that is confirmation of the daily uptrend. That is super, super bullish. Remember, we have a golden cross here. That is extremely bullish as well. But with the macros looking nasty and with the S&P breaking its bear abla, the S&P can definitely come over here and take out Bitcoin. So earlier today, I told my Telegram group that I took some profits. I did not panic sell. I just locked in gains from some of the positions that I opened in early February because I believe things are going to be a little bit more rocky than I expected. I am still using the cycle theory as my base case to start accumulating for the next bull market. I will be buying more crypto with that. I am not taking it to my account or anything like that. One of the things that I'm going to be buying is definitely Hex, because this year it's just been absolutely Hex has just been a beast. Look at this move, up 220% above its bear abla that was part of the original descending triangle. I'm looking to pick up Hex between 4 cents and 2.5 cents. I'm not looking to sell this thing. I don't know what's going on with Pulsechain. This thing could rip. It has decoupled before, and it could decouple again. Now you can see we're above the bear market trend line, rejecting the 377 exponential moving average. This is one of my blue chips that I'm going to be picking up. If we do get that massive swing low in the markets, I'm also going to pick up Matic and ETH. Those are the only things I'm interested in other than Donald Trump NFTs and this new NFT pack that I haven't mentioned yet. This is called A Kid Called Beast. It's just lit, bro. They're AR, they're 3D, you know, like this is badass. I really like the style. I like everything about these. I just don't like the price. They're 1.5 ETH. So if we get a swing low, I'm definitely going to pick up one of these. This is not a paid shill. I just dig it. Okay. And just look at their Twitter. It's just so lit, man. I love their Twitter. I love the vibe. You know what I mean? And it looks like it has legs. It looks like a cool kids club that I want to be a part of. So the macros aren't looking so hot. Inflation is kind of heating up again, which is suggesting more pain to come. The core PCE, that is the personal consumption expenditures, the index rose 0.6% in January and was up 4.7% from the year earlier. Now, the core PCE is one of the main things the Federal Reserve looks at when they're talking about raising rates. We got the minutes from last January. Most all of the governors of the Federal Reserve wanted to raise 25 basis points except two. Bullard was one of them. They wanted to raise it by 50 basis points, with the CPI hotter than expected, with the PPI hotter than expected, and with the PCE hotter than expected. It's looking like we might get a 50 basis point rate hike next month. It's looking like Jerome Powell has lost control of inflation once again. People are spending more money on less goods and services, on record $1 trillion credit card debt. Things are looking just a little bit bleak with the CPI, the PPI, the PPE. But is the PB still big? Of course it is. The housing market looks like it's also in trouble. Mortgage applications to buy a house just collapsed to an index of 147. That is the lowest level of buyer demand in 28 years, even lower than the 2008 crash. It's down 41% from last year. The mortgage applications are collapsing because people can't afford a house. Right now, the house payment versus median income ratio is 40%. That means the typical American family cannot afford to buy a house. Right now, with mortgage rates at 6.88% plus tax and insurance, it's over $2,500 a month. That is up from the peak of the 2006-2007 bubble of $1,400 a month. When my house was done in August, I got a 4% interest rate. Now we're looking at 6.88%. Like, something has to break, something has to snap, and housing is about 16 to 18% of US GDP. It's almost a $40 trillion market. It is a very serious thing. It looks like we're probably not out of the woods yet, but my trading strategy remains the same. Yes, I did take a little profits on some of the trades that I had, but I am still accumulating into the next bull market. Sam Bankman-Fried just racked up 12 more charges, exposing him to 40 more years in prison. That is 155 total. If he's convicted on everything, congratulations, sir. You played yourself. SBF and friends made over 300 political contributions that were unlawful because they were made as a straw donor or paid with corporate funds. And a lot of that was customers' funds. They took money out of your wallet, they illegally gave it to politicians in hope for regulatory favor. They were hoping they could work with Gary Gensler and try to cancel DeFi and steal all the market share. They were hoping for enforcement actions against their competition. That's how politics works. That's how corporate takeovers work. It is a game of thrones. And Sam almost pulled it off. This is what peak male performance looks like, guys. I hope he made it on time to the model walk of 2023. For all I know, he's going to get like 5 months probation and a little bit of community service. The system is so screwed up. But I do think that the FTX collapse was the bottom of this market. The worst things that could possibly happen have already happened. We've had the Terra Luna implosion. We had Celsius, Three Arrows Capital, BlockFi, Voyager. All these things have already collapsed, and I think the liquidity crunch is pretty much over. I'm not surprised by any of this stuff. Like, I've been around since 2017, and I've watched nothing but rugs, craziness, and scams. I'm surprised that I was able to not just survive this market, but thrive in this market. Here is an average day in crypto. Crypto is definitely the wild, wild west. It'll chew you up and spit you out. You have to stick to the core principles, hold your own keys, never trust a counterparty. You have to stay up on the trends. You have to stay up on the news. Now, look at this. Even Polygon, which is one of my favorite blue chip tokens, laid off 20% of their staff. They've had problems. They've had outages since then. So they tweeted this. They said their treasury is healthy. They have $250 million in there. They also have 1.9 billion Matic, which means they blew $200 million in 1 year since they raised $450 million in February 2022. To which the co-founder responded, "We have a $100 million venture fund too." Cool flex, bro, but how did you blow $200 million in 1 year? I suspect maybe they had some money tied up in the whole FTX collapse. It shows you how bad this contagion really was. I guess now we know why it's called Polygon. After yesterday's outage, 25 of the 100 total Polygon validators were about to lose their staking status, so they throttled everything back 95% to try to save them. They saved 18 validators so far, but it just goes to show you how messy and ugly the Polygon Layer 2 scaling solution really is. Speaking of Layer 2s, Coinbase is launching one after losing $2 billion and 17% of its user base in 2022. Let's hope this can get off the ground better than their NFT platform. I was really excited when Coinbase was teasing a big announcement. I was hoping it's going to be some front-end work for Bitcoin ordinals that would really be leading the charge in development in 2023, but instead we got a Layer 2 that nobody asked for. It's based on optimism. ETH is the native token. There is no base tokens. Do not buy those. Those are definitely 100% a scam. Now, these L2s, I'm not a fan of them. They are extremely centralized. That means VCs at Coinbase are going to hold like 5 multi-sig keys. Have we learned nothing in all of these centralized exchange collapses? We are just doing the same thing over and over again. I'm more into layer 1 horizontal scaling like Pulsechain. It's coming, guys. Hours away. So how long is this L2 going to last with Coinbase? They're subject to United States laws. I mean, SEC chain is going to be lit, fam.
Bullshit.
I know this video is a little bearish, but there is glaring red flags in the real economy and in the financial economy, things we can't ignore. We have to be on our toes. 2023 is looking like it's going to be a little rockier than we expected, but overall a midterm, long-term bullish on cryptocurrency. I mean, if you look at Cash App, last year in 2022 in the bear market, Cash App users bought over 7.11 billion in Bitcoin. That is amazing. It just shows you how mainstream we're going, how big corporate firms are going to be onboarding new people. I mean, just look at the dump NFTs as an example. How many people got crypto wallets just because they are fans or they are part of the tribe of Donald Dump? You know what I mean? It's just going mainstream everywhere. Normies are getting on-ramped everywhere. And I think this next bull market is going to be crazy. And I'm going to continue to accumulate on the cycle theory as my base case, but they did use an emoji here in this, which is a security. According to the SEC, they're suing NBA Top Shots. They are saying that use of emojis, the rockets in the chart up, are suggesting price gains, which is a security. Oh, I better lawyer up, fam. I don't want to be sitting over there next to SBF. But anyways, guys, I will be live with Access Alive on next Thursday. Please like and retweet his tweet. It's in the description box below. It should be a dope stream. And then on Sunday, we're going to be having a live stream. We're going to be having a hangout, but we could even possibly do it earlier as soon as this post hits 100 likes. Also, jump into our Telegram chat. It's in the description box below. You can ask me anything you want. You can stay up on my market analysis during the week and just chill and chat. There, it's free. I'm one of the only guys that's like, dude, come hang out for free. So join there. Come hang out. Bring your memes. But anyways, guys, I really appreciate it, man. If you want to support me, hit the like and the sub, man, and a comment. That's really a great way to support me. I'm not asking for your money. All right. So like and subscribe. Join the Wolf Pack, and I'll see you on the next one. Peace.